the country will come back. It'll go through a big recession and everything, but it'll come back, and it's coming back. So don't ever worry about America. It'll tell you, you're in the right place. The lessons are that people will continue to make the same mistakes they've made. Humans, it doesn't correlate to IQ particularly. When they get greedy, and we had this huge bubble in the most important asset the American public has, housing. So you had a huge bubble in something that you could borrow heavily against. So you could run a margin account effect on a house instead of stocks, and the conditions got very lax. And so when that bubble popped, but people came into that gradually. When they get fearful, it happens all at once. When people get scared, they all want to leave at one time. And we had them all want to leave at one time, and that'll happen again. It'll happen with a different set of circumstances, but the human animal will keep behaving pretty much the way it has in the past. So we will have periodic recessions. We'll have an occasional panic, which doesn't all recessions don't come from panics. But the good news is, if you look at the 20th century, in the 20th century, we had 2 world wars. We had the Great Depression. We had the flu epidemic. We had the Cold War. We had the atom bomb, you name it. The Dow Jones average went from 66 to 11,497. With all these terrible things happening supposedly at various times. America works. And when I bought my first stock when I was 11, that was in the spring of 1942. And that was a couple months after Pearl Harbor. And we were getting clobbered in the Pacific at Corregidor and Bataan. The Death March of Bataan. And in the European theater, the Blitz of England was on. And the Dow was at about 100. But just look at where we are now. The country really works. The trick is, it seems to me, the obligation of a society as prosperous as ours is to figure out how nobody gets left too far behind. Right. You will have periodic recessions, and you will have an occasional panic brought on by something that who knows where it comes from, and the thing to remember at that time, I wrote an op-ed piece in the New York Times in the fall of 2008, and I said, the country will come back. It'll go through a big recession and everything, but it'll come back, and it's coming back. So don't ever worry about America. It'll tell you, you're in the right place. The most important thing is to be able to define which ones you can come to an intelligent decision on and which ones are beyond your capacity to evaluate. You don't have to be right about thousands and thousands and thousands of companies. You only have to be right about a couple. I met Bill Gates on July 5th, 1991. We were out in Seattle, and Bill said, "You've got to have a computer." And I said, "Why?" And he said, "You can do your income tax on it." I said, "I don't have any income. Berkshire doesn't pay a dividend." He said, "Well, you can keep track of your portfolio." And I said, "I only have one stock." I said, and he says, "It's going to change everything." And I said, "Well, will it change whether people chew gum?" And he said, "Well, probably not." And I said, "Well, will it change what kind of gum they chew?" And not. And I said, "Well, then I'll stick to chewing gum and you stick to computers." I don't have to understand all kinds of business. There's all kinds of business I don't understand. But there's thousands of opportunities there. I did understand the Bank of America. I'm able to do that. I'm able to understand some given percentage. But Ted Williams wrote a book called The Science of Hitting. And in The Science of Hitting, he's got a diagram, shows him at the plate. And he's got the strike zone divided into 77 squares, each the size of a baseball. If I only swing at pitches in my sweet zone, which he shows there, and he has what his batting average would be, which is 400. If he had to swing at low outside pitches, but still in the strike zone, his average would be 230. He said the most important thing in hitting is waiting for the right pitch. Now, he was at a disadvantage because if the count was 0-2 or 1-2, or even if that ball was down where he was only going to bat 230, he had to swing at it. In investing, there's no called strikes. People can throw Microsoft at me and, you name it, any stock, General Motors. I don't have to swing. And nobody's going to call me out on called strikes. I only get a strike called if I swing at a pitch and miss. So I can wait there and look at thousands of companies day after day. And only when I see something I understand and when I like the price at which it's selling, then if I swing, if I hit it, fine. If I miss it, it's a strike. But it's an enormously advantageous game. And it's a terrible mistake to think you have to have an opinion on everything. You only have to have an opinion on a few things. In fact, I've told students, if when they got out of school, they got a punch card with 20 punches on it, and that's all the investment decisions they got to make in their entire life, they would get very rich because they would think very hard about each one. And you don't need 20 right decisions to get very rich. 4 or 5 will probably do it over time. So I don't worry too much about the things I don't understand. If you understand some of these businesses that are coming along and can spot things if you can spot on Amazon, for example, it's a tremendous accomplishment what Jeff Bezos has done. And I tip my hat to him. He's a wonderful businessman. He's a good guy too. Could I have anticipated that he would be the success and 10 others wouldn't be? I'm not good enough to do that. But fortunately, I don't have to. I don't have to form an opinion on Amazon. And I did form an opinion on the Bank of America. And I formed an opinion on Coca-Cola. Coca-Cola's been around since 1886. There's 1.8 billion 8-ounce servings of Coca-Cola products sold every day. Now, if you take 1 penny and get 1 penny extra, that's $18 million a day. And 18 million times 365 is 7 billion, 3 less 730 billion, or $6,570,000,000. So annually, $6,570,000,000 from 1 penny. Do you think Coca-Cola is worth a penny more than, Joe's Cola? I think so. So, and I've got about 127 years of history that would indicate it. So those are the kind of decisions I like to make. And you may have an entirely different field of expertise than I would have, and probably much more up to date in terms of the kind of businesses that we're seeing evolve. And you can get very rich if you just understand a few of them and understand their future. But fortunately, I don't have to. If we go into Heinz, I look at people pouring ketchup on, hamburgers and potatoes. I don't think it's going to change. And the nice thing about it, some products travel. Some products don't travel. Candy bars don't travel well. Soft drinks travel, and ketchup travels. I like products that travel. The best investment I ever made, I bought a book in 1949 by a fellow named Ben Graham called The Intelligent Investor. I don't remember what I paid. But aside from what I paid for my 2 marriage licenses, that was the best investment I ever made. It's very important to have the right framework. You need to have an approach to investing that's sound. And Graham's approach is simple, but some people adopt to it, which I did immediately, and most people don't. But if you have the right philosophy, you will find opportunities as you go through the next 20, 30, 40, 50 years. And frankly, you're most likely to find them in periods when we were having the panic. Stocks sell at silly prices from time to time. Most stocks at one time or another sell at very silly prices. It doesn't take a high IQ to figure out that they're cheap, but it does take a temperament that's willing to step up and actually act. I tell people, if they're going in the investment business, if you got 160 IQ, sell 30 points to somebody else because you won't need it. I figured out very early, you don't have to be that smart in this business, which is fortunate, but you do have to have the right temperament. And you have to be able to ignore what other people are saying and simply look at the facts and decide, is this stock which is selling at X worth 2X? And occasionally you'll find things like that. And when you don't find them, you don't do anything. So that's my generalized stock tip. No names.
You mentioned that people will make the same mistakes in terms of the boom-bust cycle. But there have been several recent financial developments, such as the creation of derivatives, which has since exploded recently. And you once called derivatives weapons of mass destruction.
Right.
Now that derivatives are a $700 trillion industry, do you see this as setting the stage for the next financial crisis?
It's very hard to tell that, we've enacted Dodd-Frank. And if you look at what happened in September and October of 2008, there were some extraordinary things done. The Federal Reserve poured $85 billion into AIG, and if they hadn't, our world would be very different. Hank Paulson guaranteed money market funds at a time when 30 million Americans with money market funds were panicking, and when $300 billion in 3 days had gone out of the non-government money market funds, 125 of it had gone back into the government. $300 billion, that was almost equal to the deposits of Wells Fargo or Wachovia at the time, which were then two separate institutions. Both of those authorities have essentially, I don't think they can do that under Dodd-Frank. When there's a panic, the only thing that will stop it, basically, is when somebody who has the ability and the will says, I'm going to do whatever it takes. And basically that's what Bernanke and Paulson, and finally Congress in a kind of a reluctant way. There will be another panic, where it comes from, who knows. But when that time comes, the question will be, are the people who have panicked, who have frozen, who have caused the economic engine to stop, will they believe and come right back and be doing something? And I'm not sure what's been enacted is a plus or a minus in that regard. Regardless, the country will come through. It's very hard to write regulations that will keep people from acting foolishly, particularly when acting foolishly has been proven very profitable over the preceding few years. It's just the way it works. Humans, they all think they're Cinderella at the ball, and they think, as the night goes along, the music gets better and the drinks flow and everything, they all think they're going to leave at 2 minutes to 12. And of course, there's no clocks on the wall and they're still dancing. So it'll happen again. But buy when it happens. I'll be buying. There is a very, I think, structural problem as a market system gets more and more specialized. If you go back to an agrarian society like we had a couple hundred years ago with most people working on a farm, most people fit most job requirements. I mean, it was, as the world has become more and more specialized, I think we keep moving away from that. So a market system will not pay well for a significant percentage of society. They aren't needed to keep GDP itself going up and people at the top. And I think government has to address that. I sometimes toss out to students this proposition. Imagine that it's 24 hours before you're born, and you're sitting there, Johnny or Joni, we don't know yet, and you're in the womb, and a genie comes. And the genie says, John or Joni, you strike me as a remarkable potential human being, and I'm going to give you an enormous responsibility. I'm going to let you decide the world, how the world is going to work into which you're going to emerge. You can decide on the economic system, the social system, the political system. You design it. And whatever you design, that's going to be the system in which you live, your children live, grandchildren live. And you, being wise beyond your minus 24 hours of age, say, I know all about you, genies. What's the catch? And the genie says there's one catch. Just before you emerge, having designed the system, put it in cement, you're going to go over to that barrel over there that has 7 billion slips in it, one for every human being in the world, and you're going to pull out a slip. It may say male, it may say female, it may say white, it may say black, it may say infirm, it may say strong, it may say bright, it may say below average, it may say United States, it may say Bangladesh. Now, not knowing which ticket you're going to pull out, what kind of a world do you want to design? Well, you certainly want to design a world that produces lots of goods and services and keeps producing more and more. You want a lot of stuff around. It could be the world's fairest society, but if it's on a barren desert island, it isn't going to do anybody good. So you really want something that works in terms of output. But once you have something that works in terms of output, you certainly want something that eliminates fear from everybody's life. Now, that doesn't just mean a lot of cops. It means fear of old age, fear of health, all of those problems. And you certainly want a system not knowing what tickets you're going to get that takes care of the people that don't survive so well in that market system, which maximizes the amount of output, your first goal. And I think we've done a wonderful job at the first stage. We have turned out lots of stuff. We have not thought as much, although we've thought a fair amount. I mean, when Social Security came in and all of that, I mean, this country has developed in terms of thinking about how a rich family should behave. But I think we are in the stage where we need to focus more on making sure that the people who get the bad tickets do better than they are. And, we said that blacks were 3/5 or slaves were 3/5 of a person back when we started. And said, we said all men are created equal in 1776, and in 1789 we said blacks are 3/5 of a person. We not only said all men are created equal, but in the Gettysburg Address, Lincoln repeated it. It was 1920 before we passed the 19th Amendment for women. So we just treated women as a essentially different class for all those years. So I think we've gone significantly in the right direction in terms of behaving better as a society. And I think we've gone terrifically in the right direction in terms of turning out lots of stuff. But I think we have to address the question of how do you treat the people that are left behind in a system that maximizes the output of goods and services. And that can only come through government. The economy is getting better. We are in an experiment which hasn't really been tried before. I mean, Fed has $8.5 trillion balance sheet, and buying securities is usually easier than selling securities, as sometimes people find out. So we don't know how this game plays out. And just the announcement, whenever it was a few months ago, that tapering was going to occur, that had some significant market reactions, probably 100 basis points or so in the 10-year. And what will happen when if they actually try to deleverage the Fed? I mean, what has happened is the American public deleveraged and the government leveraged up through the Fed. If the Fed deleverages that in any big way, that will be a new experiment. And the Fed is the greatest hedge fund in history. The Fed is the fourth largest contributor to the United States government's revenues that there is now. That wasn't the case a few years back. And it is under no pressure, none whatsoever, to have to deleverage. So it can pick its time, and if you have somebody wise there, it can be handled. But it is something that's never quite been done on this scale. It'll be interesting to watch.
Are you seeing signs of inflation beginning to increase?
We're seeing very substantial inflation. Interesting. We're raising prices. People are raising prices to us. It's being accepted. I mean, it's not, take home building. I mean, the cost of, we've got 9 home builders in addition to our manufactured housing thing and operation, which is the largest in the country. So we really do a lot of housing. The costs are just up. Steel costs just every day. They're going up. And there hasn't yet been, because the wage stuff follows. I mean, if the UAW writes a 3-year contract, we got a 3-year contract. But if you're buying steel at General Motors or someplace, you're paying more every day. So it's an economy really, it's red hot. I mean, and we weren't expecting it. I mean, all our companies, when they thought when we're allowed to go back to work, at our various operations, we closed the furniture stores. I mentioned, they were closed for 6 weeks or so on average, and they didn't know what was going to happen when they opened. And, they can't stop people from buying things, and we can't deliver them. And they say, well, that's okay, because nobody else can deliver them either, and we'll wait for 3 months or something. And sort of the backlog grows. And then we thought it would end when the $600 payments ended. And I think, around August of last year, it just kept going. And it keeps going, and it keeps going, and it keeps going. And I get the figures every week. I call, or Bumpkin calls me, and we go over day by day what happened at 3 different stores in Chicago and Kansas City and Dallas. And it just won't stop. People have money in their pocket, and they pay higher prices. And when carpet prices go up in a month or two, we announced a price increase for our costs are going up. Supply chains all screwed up, for all kinds of people. But it's almost a buying frenzy, except certain areas you can't buy yet. You really can't buy international air travel, and so the money is being diverted from a piece of the economy into the rest, and everybody's got more cash in their pocket except for. Meanwhile, it's a terrible situation for a percentage of the people. This suit, I haven't worn a suit, for a year practically, and that means that the dry cleaner nearest just went out of business. I mean, and nobody's bringing in suits to get dry cleaned, and nobody's bringing in white shirts to the place where my wife goes. The small business person, if you didn't have takeout and delivery services for restaurants, you got killed. On the other hand, if you've got takeout facilities, you've done, same source sales of Dairy Queen are up a whole lot, and they adapted. But it is not a price-sensitive economy right now in the least. And I don't know exactly how when it shows up in different price indices, but there's more inflation going on quite a bit more inflation going on than people would have anticipated just 6 months ago or thereabouts.
Yeah, and there's one very intelligent man who thinks it's dangerous to start.
Inflation is going to affect you. It's certain we will have inflation over time. And we are following policies in this country now to stimulate things, which stimulate business, which are bound to have some inflationary consequences. And to the extent that we borrow money from the rest of the world, it would be very human on the part of politicians in the future decide that they would rather pay the rest of the world back in dollars that are worth far less
than the dollars they borrowed. I mean, it's the classic way of reducing the impact and cost of external debt, and we're building up a lot of external debt. I always find it interesting when politicians now talk about using the taxpayers' money to do this and the taxpayers' money to do that, and how the taxpayers are paying the bonuses at AIG. We haven't raised taxes at all in this country. Taxpayers are paying nothing beyond what they were paying a couple of years ago. As a matter of fact, the federal revenues this year, which were close to $2.6 trillion a couple of years ago, maybe more like $2.3 trillion. So we are taking less money from the taxpayers. The people who are really paying for the things we're doing will probably be the people who are buying fixed dollar investments, much of it from the U.S. government, and who will find the purchasing power when they go to redeem those investments to be far less. So you might say that the AIG bonus is probably the Chinese are the people that are ultimately paying the most in terms of the loss of purchasing power they will have with their holdings of government bonds, U.S. government bonds, many years down the road. But it sounds better to say the taxpayer than to say the Chinese are paying for it. It's an interesting situation. I read that comment every day about how the taxpayers are doing this and that. I haven't had my taxes raised. You haven't had your taxes raised. They're giving me $250 back here pretty soon. Taxpayers haven't paid anything so far. And my guess is that the ultimate price of much of this will be paid by a shrinkage in the real value of fixed dollar investments down the road. That will be the easiest thing to do. And if it's the easiest thing to do, it's the most likely thing to have happen. So you will see plenty of inflation. Now, the best protection against inflation is your own earning power. If you're the best teacher, if you're the best surgeon, if you're the best lawyer, whatever it may be, you will commit a given part of other people's production of goods and services, no matter what the currency is, whether it's seashells or Reichsmarks or dollars. So your own earning power is the best by far. If you're the best journalist, whatever it may be, you will get your share of the national economic pie, regardless of the value of whatever the currency may be as measured against some earlier standard. The second best protection is a wonderful business. If you own the Coca-Cola trademark company, you will get a given portion of people 20 years from now and 50 years from now for your product. And it doesn't make any difference what's happened to the price level generally, because people will give up 3 minutes of labor, whatever it may be, to enjoy, 12 ounces of a product they like. So those are the great assets, your own earning power first, and then the earning power of a wonderful business that does not require heavy capital investment. If it requires heavy capital investment, you get killed in inflation. And with those guidelines, I would tell you the best thing to do is invest in yourself.
Yes, the young man should become a brain surgeon and invest in Coca-Cola instead of government bonds.
If you discount it back, and you're discounting at present interest rates, stocks are very, very cheap. Now, the question is what interest rates do over time. But there's a view of what interest rates will be based in the yield curve out to 30 years and, so on. It's a fascinating time. We've never really seen what shoveling money in on the basis that we're doing it on a fiscal basis while following a monetary policy of something close to zero interest rates, and it is enormously pleasant. But in economics, there's one thing always to remember: you can never do one thing. You always have sending out huge sums. The president said it on Wednesday: 85% of the people we're going to get a $1,400 check. 85%. A couple of years ago, we were saying 40% of the people never could come up with $400 of cash. So we've got 85% of the people getting those sums, and so far we've had no unpleasant consequences from it. I mean, people feel better. The people who get the money feel better, and people who are lending money don't feel very good. But it causes stocks to go up, business to flourish. It causes an electorate to be happy, and we'll see if it causes anything else. And if it doesn't cause anything else, you can count on it continuing in a very. There are consequences to everything in economics, but that is why the Googles and the Apples, when we don't own Google, we don't own Microsoft, but they are incredible companies in terms of what they earn on capital. They don't require a lot of capital, and they gush out more money. If you're trying to find
bonds that gush out more money from the federal government. We got $100 billion that's gushing out, $30 or $40 million a year, or whatever it may be, depending on the short term. So that puts the pressure on, which is exactly, of course, what the monetary authorities want done. The economy and they're doing it in Europe, even more extreme. And they're pushing, and we're aiding it with fiscal policy, and people feel good, and people have become numb to numbers. Trillions don't mean anything to anybody. And $1,400 does mean something to them. So we'll see where it all leads. Charlie and I consider it the most interesting movie by far we've ever seen in terms of economics, don't we, Charlie?
Yes, and the professional economists, of course, have been very surprised by what's happened. It reminds me of what Churchill said about Clement Attlee. He said he was a very modest man and had a great deal to... And that's exactly what's happened with the professional economists. They were so confident about everything. It turns out the world is more complicated than they thought.
Keynes said it many years ago that it's an invisible tax that only one man in a million really understands. And it's a tax on people that have had faith in their currency that the government's issued. The best investment against inflation is to improve your own earning power.
You just brought up the topic of inflation.
Very few people maximize their talents.
I wanted to ask, do you believe that the consumer price
increase your
index
talents,
is a
they can't
good
tax it
and
while you're
true
doing it.
and accurate
They can't take it
measure of
away from
inflation?
you. So become more useful.
Well, that's a good question.
In your activities,
if you go to
your
the furniture
profession,
market,
doctor, lawyer, whatever it may be. That is the best protection.
Much. I mean, it makes it very
currency
tough
that might
for comparable
decline
store
at a
sales when
rapid
you're selling
rate.
DVD.
And the best investment,
a few years
passive
ago, now you're
investment,
selling
I
a quarter of it.
think
So
is
there's
a
certain
good
areas
business.
that have
If
been
you
huge,
own
in effect,
an interest
deflationary aspects.
in
But
a
I do
good
think the
business,
CPI,
you're very likely
like I say, Gross is
to
written about
maintain
this, but the CPI is
purchasing power
is
no
not
matter what
particularly
happens to the currency.
good.
But
And
it's
I
interesting in
always
the
get a
United
kick out of when they
States,
talk about the
value of
core
the dollar
CPI,
since I was
and then they
born
say
has
that
declined
excludes food and
by
energy.
94%.
Food and energy
so
strike
inflation
is pretty core to anything.
is a very cruel
In terms of the
tax on
average
people who
I can't
believe
think of
in
anything
fixed
that's much
dollars,
more
but
core.
things can work out pretty well.
The
even
CPI,
during
as you may or may
inflationary
not
times.
know,
I mean, if somebody told me when I was
many
born,
years ago,
that the dollar
had
bill was
housing
going to go to
figured
6
in
cents
directly.
I might have said,
CPI now has a
let me go
rental,
back.
which is an imputed
I'm not
rental
interested in
type
merging into that kind of world, but
computation.
actually
Still
it's
a
worked
large
out pretty
portion
well,
of the
so
CPI,
I have no complaints.
but it does not reflect the new housing prices or rentals. The rental factor has lagged, in my view, significantly below what
I would like
housing
to
costs really
just go
are
over two items that
for an
would
American
like,
family.
particularly new
and
entrants to the
since housing
stock
is a big
market
portion,
to
I don't think it picks it
ponder
up
just
well.
a
So
bit
I would say that
before
the
they
CPI
try and do 30 or 40 trades
has
a day.
understated inflation
in order to
for a
profit
great many people.
from
Now, if
what it
you're
looks like in
older and you own
a
your
very
own house, I mean, everybody
easy
has
game.
their
So
own
I would
way
like
of living.
to
And I mean, if all
go
you do is
to
drink Coca-Cola all
slide
day,
L1.
Coca-Cola hasn't gone up in price enough,
And
in my view.
these,
And
on March 31st,
my CPI has not
I
changed
ran
very
off a
much.
list of the
For
20
somebody
largest
buying a new
companies
house
in the world
6 or
by
8 years ago
stock market value.
and
Those
driving
names, good many of
30
which
or
will be
40
familiar
miles
to you, but they were led
to
by
work or
Apple
having a lot of driving
slightly
in the family.
over
The CPI has
$2
gone up a
trillion.
lot more than
And
the government figures would
it went
indicate.
down to the number 20th was
Yeah,
worth
I see it at
330
Costco, where
odd
there's
billion.
been almost
Those
no
are the 20
inflation in
largest
the composite
companies
product that flows through
in the
Costco.
world by market value
Yet
on
in
March
other places you
31st.
get these
Now, if I had a
dramatic
little,
rising figures.
I was hoping I
I
could
don't
get a
feel sorry
little
for the people
quiz
who paid
machine so I
$27
could have
million
everybody
for
weigh in on this
8,000
answer and
foot condo
we could
in
flash up
Manhattan.
a little later, but proved technically
they have a little
impossible.
inflation, I guess it
But what
doesn't
I would
matter
like
to the rest of
you
us.
to do is look at that
It's almost
list.
weird the way
Starts
the
off with
situation
Apple,
works in terms of how
Saudi
it's-
Aramco is
Yeah,
a
it
pretty
comes
kind of a
just a few
specialized
places.
country.
If you look at the Costco annual report or the Walmart annual
whether it's
report, these are
95%
huge
owned by the
enterprises.
government or what,
And you'll
but
see their
it's-
LIFO adjustment
It's essentially
is
a
just
country
peanuts.
that's for sale.
And
there.
yeah, just
in terms of
peanuts.
that business.
Is Costco on LIFO
But
for
the
fuel?
top
Oh, I know they're on LIFO generally.
6
Are they on it
companies,
for
5 of them
gasoline
are
or-
American. So
I think
when you
so.
hear
Yeah,
people
I
say
don't
that
know.
Yeah, but they wouldn't have a
America
large
has-
inventory
No,
relative
it's got all-
to their sales volume.
not working
But
very well or something of the
At
sort.
Walmart,
You know,
it's
in the whole
inconsequential.
world,
I just got through
the
reading
6
their
top
annual report, and
companies in
the
value,
LIFO
5
adjustment
of them
isn't worth
in the
a
United
hiccup,
States.
basically. And
And if you
you
think
were
about
dealing
it,
with
we talked
$300
about
billion
this last year.
in the United States.
In 1790, we had 1/2 of 1% of the world's population. A little less, we had 4 million people.
The LIFO adjustment would have picked up changes in prices of
600,000
that
of them were
mix
slaves.
overall. relative to
Ireland
their
had more
inventory
people
level.
than the United States had.
So,
Russia
jewelry,
had 5 times
because
as many
of gold
people
and some
as the
things,
U.S.
we had some big LIFO
Ukraine had
adjustments
twice
last
as
year.
many people as the United
Steel,
States.
we've had big
So here we
LIFO
were.
adjustments. We have a steel
What did we have?
service center in
We had
Chicago,
a
and we
map
file
for
out
the
steel
future, an aspirational
at
map
MyTech.
that
And there's a big LIFO adjustment. So
somehow
it's very uneven. Now only
Carpet went no place for 20 years.
Constitution,
200-chemical base.
32 years.
There have been substantial price
later
changes in the
leaves
carpet
us
business in the
with
last
5
couple
of
years.
the top
And our LIFO,
6
we had a
companies
minus
in the world.
LIFO figure in effect
It's not an
3
accident.
years ago, and now we have
It's not because we were way smarter,
LIFO adjustment. So
way
there's been a
stronger,
significant price
and the
change
sort.
there. And
We had good
I think
soil,
overall, though,
decent climate.
for a typical young
So
family,
some of those other countries I named.
CBA probably underestimates
the system has
the burden
worked
they have faced in terms of their own
unbelievably well.
living
Just
situation.
imagine thinking of 5 of the top 6 companies in the world ending up with a country that started with 0.5% of the population just a few hundred years ago. But what I would like you to do is look at that list for a minute or two, if you want to, and then make an estimate, make your own guess. How many of those companies are going to be on the list 30 years from now? Here they are, these powerhouses. And how many would you guess are going to be on the list? Well, it's not going to be all 20. It may not even be all 20 today or tomorrow. This was March 31st. What would you guess? And think about that yourself. Would you put on 5, 8? Well, whatever it would be. I would now invite you to look at slide 2, or L2, which goes back a little more than 30 years, and look at the top 20 from 1989. And if you look at the top 20 from 1989, there's 2 things that should grab your interest, at least 2. None of the 20 from 30 years ago are on the present list. None. 0. There were then 6 U.S. companies on the list, and their names are familiar to you. We have General Electric, we have Exxon, we have IBM Corp. I mean, they're still around. Merck is down there at number. None made it to the list 30 years later, 0. And I would guess that very few of you, when I asked you to play the quiz a few minutes ago, would have put down 0. And I don't think it will be 0. But it is a reminder of what extraordinary things can happen. Things that seem obvious to you. Japan had this wonderful bull market for a very long time, so you had a number of Japanese companies on the list. Today there are none. And the United States had the 6. Now we have 13. But they aren't the same 6. I would invite you to think about one other thing as you look at this list. 1989 was not the Dark Ages. I mean, we weren't just discovering capitalism or anything else. People thought they knew a lot about the stock market and the efficient market theory was in, and it was not a backward time. And if you look, the top company at that time had a market value of $100 billion, $104 billion. So the largest company in the world, Tidal, in just a shade over 30 years, has gone from $100 billion to $2 trillion. At the bottom, the number 20 has gone from $34 billion to something a little over 10 times that. Well, that tells you something about what's happened with equality, which is a hot subject in this country. It tells you a little bit about inflation, but this was not a highly inflationary period as a whole. But it tells you that capitalism has worked incredibly well, especially for the capitalists. And it's a pretty astounding number. Do you think it could be repeated now, that 30 years from now, that you could take $2 trillion for Apple and multiply any company and come up with 30 times that for the leader? It seems impossible, and maybe it is impossible. But we were just as sure of ourselves as investors and Wall Street was in 1989 as we are today. But the world can change in very, very dramatic ways. And I'll just give you one other example you might ponder. This is when you start feeling too sure of yourself. One thing it shows, incidentally, is that it's a great argument for index funds, is that, the main thing to do was to be aboard the ship, a ship. They were all going to a better promised land. You just didn't know which one was the one they'd necessarily get on. But you couldn't help but do well if you just had a diversified group of equities. U.S. equities would be my preference, but to hold over a 30-year period. But if you thought you knew a lot about which ones to pick, or the person that you had hiring, you were paying a lot of money to, had all these ideas, and they could tell you their best ideas in 1989 did not necessarily do that well, although overall equities were absolutely the place to be. Secondly, people get enormously attracted to various industries. I mean, they think if you know, if a company says it's in the XYZ industry and that's a popular one, you can sell IPOs, you can sell SPACs, people disregard sales numbers, earnings numbers. It's just, it's the place to be. So Berkshire Hathaway, where was the place to be in 1903 when my dad was born in 1903, but that wasn't really that big of news. And it wasn't big news that actually Henry Ford was starting the Ford Motor Company. It failed a couple of times before, but he was about to change the world. I mean, the auto, when you think about everything, we've got a great auto insurance company. If there weren't any autos, we wouldn't have Geico. But it transformed the country. And Henry Ford brought in the $5 daily wage, and that was a huge thing. Assembly lines, everything, autos came along. So let's just assume that you had seen a quick glance back in 1903 of all the interstate highways, 290 million vehicles on the road in the United States, everything about it, and say, well, this is pretty easy. It's going to be cars. It's going to be autos. Well, we own a company called Marmon. We bought it from the Pritzker family some years ago. Pritzkers had built this business from many, many, many companies that they'd acquired. And the name of their company was Marmon. And I don't know exactly why Jay and Bob decided to name it Marmon, but they did own a company called Marmon. And the Marmon company is getting slightly ahead of me on the slides again, but that's okay. We called it, they owned this company Marmon, which in 1911 had been the company whose car won the first Indianapolis 500. Maybe that's why they called it Marmon. They were proud of the fact that the company in 1911 won the first Indianapolis 500. It also was the company that invented the rear-view mirror. I'm not sure whether that was a big contribution to society, and certainly around your household. Rear-view mirror, you don't want to emphasize too much. But the car that was entered in the Indianapolis 500, the guy who normally sat next to the driver and looked backwards to tell what the competitors were doing, he was sick, so they invented the rear-view mirror. So let's just assume that you decided that autos were this incredible thing, and someday there'd be an Indianapolis 500, and someday they'd have rear-view mirrors on cars, and someday 290 million cars would be buzzing around the United States, or autos, or counting trucks there. And so I decided to look at the history, and I thought I'd put up a list of auto companies from over the years. And I was originally going to put up just the ones that were the M's so I could get them on one slide. But when I went to the M's, it went on and on and on. So I just decided to put up the ones that started with M-A. And as you can see, there were almost 40 companies that went into the auto business, just starting with M-A, including our Marmon there in the middle column, and which lasted for quite a while. It was selling cars in the 1930s were really quite special. But in any event, there were at least 2,000 companies that entered the auto business because it clearly had this incredible. And of course, you remember that in 2009, there were 3 left, 2 of which went bankrupt. So there is a lot more to picking stocks than figuring out what's going to be a wonderful industry in the future. The Maytag company put out a car. Allstate put out a car. DuPont put out a car. I mean, there was a Nebraska Motor Company. Everybody started car companies, just like everybody's starting something now that can be where you can get money from people. But there were very, very, very few people that picked the winner or got the opportunity. At Ford Motor, Henry Ford had a few partners, and he really didn't like them, so he figured a way to buy them out. That was sort of the beginning of the auto finance. That's a long story, but we won't get into that. But you couldn't buy into Ford Motor, and of course General Motors became the dominant company. Finally, when Henry Ford did not really make the shift from the Model T to the Model A, did not work very well. So I just want to tell you, it's not as easy as it sounds.